Okay, so let's bring in currency expert Jens Nordvig, Exante Data's founder and CEO. He's also co-founder and CEO of Market Reader, a Wall Street analysis platform. Jens, you and I both have backgrounds, you much more so than I, in foreign exchange, currencies, commodities, rates, and everything else. What do you think is the real situation with the dollar right now? Is the shine coming off, or is this just something technical to watch out for?
A lot of investors were very optimistic about the United States going into this year. A lot of people had very, very elevated U.S. equity exposure in their international portfolios, happy with owning U.S. treasuries that had higher yields than most other bonds, right? And now we are suddenly facing just an accumulation of shocks, trade shocks, shocks to foreign policy that people didn't expect. And people are getting very uncomfortable having these very big U.S. exposures in their European portfolios, Canadian portfolios, Australian portfolios, that could go on. And we saw it in the price action last week. Very, very dramatic. And it's continuing this week, right, with some of the biggest dollar moves we've seen for decades as these asset allocation shifts get in motion. People reducing U.S. exposure. And we don't have to talk about, is this the reserve currency status that is in question, but people just have too much exposure. We've been used to talking about U.S. exceptionalism, right? And certainly from a cyclical perspective, we have a lot weaker growth outlook. That's one part of it. But also structurally, there are some question marks about how safe U.S. assets are, and those two things together is a problem.
So how about this? How about if I ask you whether or not you are seeing evidence of this when you speak to your clients? You talk to a lot of real money managers, asset managers, not just hedge funds, but mutual fund managers, pension fund investors. What are they saying? Is this something where you are hearing conversations about this as opposed to just saying, I think it's this?
Yeah, so we speak to chief investment officers around the world all the time, and I think it's very clear that they're in the middle of an asset allocation shift. This is not like a hedge fund where it changes their decision from one day to the other and positions change very quickly. This is something that's going to go on for multiple months. They have big portfolios. They have investment committees that need to be consulted, right? But it's a shift that is in motion. We can also see in our data, like we spend a lot of time tracking flow data. Over the last couple of weeks, big shift in terms of the attractiveness of European bonds versus U.S. bonds, something that's very rare. Normally they move together, but not in the last couple of weeks.
Let's get a little granular because the move in dollar yen, last August, that triggered that whole sell-off in the equities market on August 5th. Very quietly, dollar yen's 143. I'm sure there are light bulbs and flashing red right now. Thoughts on the weakness in the dollar against the yen?
So last night we had some headlines that came across that said Scott Bessent was going to talk with Japanese counterparts about dollar policy, right? So a part of the uncertainty around the dollar has to do with dollar policy. We've been used to, for many decades, that we had some kind of strong dollar policy. And with this administration, we don't know exactly what the dollar policy is yet, but there's a lot of concerns that it could be a weaker dollar policy. Doing accords with Japan and around the yen would be something that structures an orderly decline of the dollar against the yen, and that's part of the thinking. We can see it in the price action right last night.